Kunal, and what are you going to teach our viewers today via the segment?
Good morning, Cheryl. On the segment today on Pathshala, today we'll be discussing of a specific strategy which is called trading whipsaws. Now, whipsaws are part of every kind of a trade, every kind of a stock, every kind of a strategy. There would be a point where a stock goes into a double whip. Double whipsaw mode, and then when the whipsaw actually happens out, the best strategies or how to identify the best strategy and try and enter the trend post the whipsaws. This is the charts of M&M which I have pointed out, and this is the charts over the last 10 to 12 months for the stock. When the stock was in this zone of 700 to 750, so this was the point where M&M took a lot of support at this particular mark. This was the first whipsaw which has happened, which means that the stock managed to break out of this 100-pointer kind of a band for itself. It could not sustain those breakout levels. You can see that formation of the two bearish candlestick patterns which had happened for M&M over here. And then this was the first whipsaw which led into the stock correcting, coming back to the lower end of the support. Now this is a huge support which the stock had been trying to take support over the span of 6-8 months. But this time around the stock had managed to break the support. But then the break could not last for not even a week or so for the stock price, and you saw post that the stock managed to recover back again. So the first important point is that whenever a trade or a stock gets into a breakout mode, don't jump into the breakout on the first candlestick itself. Wait for a confirmation of 3 candlesticks. That's the classical rule which we follow for technical analysis. So it helps us avoid the whipsaws. Now, if you look at the charts over here, this was the point where M&M actually confirmed a breakout yet again. This was a formation of an inverted head and shoulder pattern, which is a confirmation. And then post that third candlestick pattern is where you saw the stock getting a confirmation that it's not coming back into the channel. So this was the classical confirmation which had happened for M&M. Post this level, which was around 850 mark, you see the stock trading right now, which is at 1380 plus levels. So again, a classical strategy, how to avoid trading whipsaws.